Hello everyone, this is the Eagle Star. I have been a little bit sick this week, so uh, in lieu of posting charts, I decided to do a video. And in this video, we're looking at the New Zealand dollar, US dollar pair, and basically I'm just going to help a little bit in how to spot swings. So you can follow my pointer along, and we're going to kind of look at the swings of a market. As the market unfolds. So forgive me if I cough a little bit, but we continue. So the New Zealand dollar made recent lows on the bottom left, shot up, went down, and continued up. So for a move like this, we want to put in a modified shift to see if you can capture price. So everyone will notice that I really don't use anything to draw the modified shifts. A regular pitchfork might be better in this situation. So I'll draw from the left first and then from the right. But still, we don't capture price. So I'll try the left as a different A point. And you can see that that captured price nicely. So the A point is a little bit above that. So imagine if it dips down a little bit, comes back up, it's a price spike, comes back down. Flows like the ocean wave up. And for this example, excuse me one moment. For this example, we're going to go in a little bit farther. Okay. We'll kind of talk about price as we zoom in and kind of go over a little bit what price is doing as it's making this new trend. So we're going to scroll back and start. So 22nd to 24th, you can see that. 22nd, 23rd, 24th, 25th. So this is the weekend starting here. Okay. This is the weekend open right there. This is the first bar on the weekend. This is the first bar after the weekend open. Okay. So what just happened? So you have a huge push down. Price breaks out of that. First bar is huge. This would be considered a change in behavior. Okay. Okay. So change in behavior or a wide range bar or both, you could say. So that zooms up, right? Now, there's also something interesting. If you can see it, but not everybody can see this line. See if I can draw it correctly. Something like that. You could also draw it from this point. Something like that. Okay. So this is the new path of price. Okay, might even be a center line. If you copy it out here, almost a new fork. Okay. Now, you back up a little bit. So let's imagine that that's a fork. Okay. That would be the sliding parallel to that fork right there. But we're not really focused on this little move here because we're preparing ourselves for something bigger. Notice too where price stops. Here, right? It forms a huge wall. And it spikes above to take all these sellers out right here. And that high is 78.75. The multi-pivot line is 78.25. So that multi-pivot line is 78.25, okay? So think about the orders in a market. Most of the time they're at zeros, 25, 55, sorry, 25, 50, 75, and zeros, okay? So a lot of times you'll be able to spot a level forming at a line as well. And that's something that I never really talked about before. So this huge bar here is almost a confirmation of this shelf, right? But if you went short here, you would have been stopped out, right? So what information from the left does that show? Okay, so we'll just use this little bitty area here. So there's still sellers up here. There's still sell orders right in here. Okay. Now I'm going to draw just a very quick horizontal line to show that. Okay. So that would be a resistance trade right there. Somebody that's charting this saw orders to sell between 78.75, has orders to sell between 78.75 and 78.80. Okay. You see that? So price comes down. Now price zooms up, holds off, zooms up, holds off, zooms up. Because what's happening is each of these little levels on smaller time frames has orders. Because people still think they're going to go lower, or they have stop losses in place, or they have buy orders in place. Okay, so each one of these little clusters, as it was falling, still had orders in place. Some of them were break-even orders. Some of them were additional sell more orders. Okay, but this is just a very basic and brief explanation as to what's going on here. Okay, so if you didn't have if your stop was up here, right, way up here, and this started coming through, you want to get out of break even if you were short from here, right? So that's what some of these people are doing. They're getting break even, or they're going long, but then they get messed up in here, and then it drops again. So where does it drop to? It drops to one of these levels. Right? So it drops to in here, in between that, right in there, right? And you could say, oh, that's a demand or supply, sorry, demand zone or support. So hits this resistance, bam, bam, bam. Huge spike up, probably some type of news event. Spike up that brings in those sell orders from the top, crashing down. So what does price do? Like it usually does. It follows order. Down, up, hits that shelf, down, up, hits that shelf, down, we go, right? So it forms a new ABC. A, B, C. Right. So a new ABC. So after it forms that new ABC, it does not hit the median line. Pay attention to that. So it has this huge swing, comes up, keeps going, boom, 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 does not hit it, goes back. So test it again, close with good separation, right? So test. At this point, you could have a buy order here, okay? Because you know that it's coming, you know that it's going to start to turn. Let me zoom into that. Okay. Closed above this open, right? That's going to tell you something, okay? And this one here, price didn't get under there, right? So let's say you had an order here to enter. Now, for me personally, I like to get under horizontal structure when you enter the trade. Tim likes to use lows, right? Like under this low or under the low to the left For me, I like to use both. I like to use lows and highs that I see orders at. So put your stop under here. For this, I'm not going to go into too much detail about ATR stops, but it's about 25 pips, 26 pips on a 4-hour chart. So a little bit above that high. So you have 30 to 35 pip stop. I'm getting a little ahead of myself there, but okay. One moment. So price continues to rise. Now, if you're not in this already, price is going to come down again. Now, this is making higher highs, high, 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 higher lows, low, 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 low. Okay, so higher highs and higher lows. So what does that mean? It means I'm only going to be buying. I'm not going to want to sell this market. Okay, that's a very basic thing, but I think some people are trying to sell when it reaches a median line. You got to be very careful about that, because when it hits the median line, it can reverse and it can turn, but you want to give it time to breathe and show you that it's going to start turning. You don't just want to sell the top of a median line, because what happens if it goes to a warning line or a warning line 2, warning line 3, warning line 4? Okay, so price zooms up, finds buyers, huge thrust up, breaks this, has some breakup buyers here, comes down and keeps going up, comes down, another test, that line, hits it and closes with good separation. Okay, hits it again, comes down. It might have some people worried here, but if you got in here or here or here, let's see what day is this. One second. Yeah, it's a weekend, so it looks like some people got out and then some people re-entered, or people just entered the market. And you have a little cluster here also. So cluster, cluster here, cluster here. Everybody see that? So those closes were vibrational energy that was being thought about in advance. If you can understand what that means, okay. So they were pushing it in and around this area of 77, 75 to 77, 80. Now, comes up again, wide range bar, okay, or you could say an engulfing bar. Now, if we looked at candlesticks, how easy does this look? Engulf, engulf, engulf. I could say that's not necessarily engulf, but it took out that area. So engulf, right? Comes down, goes up, wide range of bar, comes down, hits again. How many times does this give you to enter? 1 hits, 2 hits, 3 hits with frequency. Look at these lows here. They follow along the line. Hits, 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 hits. This is like a free trade. Okay. So hits, 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 hits. Okay, these are 4-hour bars. So you just had a whole day to get long. Okay. 1, 2, 3. 1, 2, 3, 4, 5, 6, 7, 8 times 4, 32. You had 32 hours to get long this market. That was right after the weekend again. So this bar was a tell. Okay, this bar is a tell, just like this bar. These two bars were tells. This bar was definitely a tell. This bar was a tell. This bar a little bit. It's closed as it opened. So continuing. Higher highs and higher lows still. I'm not going to mark it, but you can mark it in your mind. So again, okay. So now this is what gets me about some of you guys that are starting with this, and you might be having trouble. Okay. So we have 1 hit, almost 2 hits. Okay. 3rd hit, 4th hit. We'll just say these fell out. 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Okay. Now, if you guys are looking for chances to get long, you had 14 bars here that showed you. I'm not going to mark them out. Well, maybe I will. Okay, 2, 3, 2. So with that, all right. Right, we'll just say it like that. Okay, goes up. Again, higher highs. Comes back down. Bam. Okay. Again. And if I was just a straight support resistance trader, right? This is what I'd be seeing. So I can kind of help. Okay, so higher highs, buy. Higher highs, buy. Higher highs, buy. Get the idea? Right there. Higher highs, buy. Okay, pullback on every pullback, right? Buy. And buy in there, okay? Higher highs. You get the idea, right? Buy, right? Or try to find a way to buy. No. So I'm just going to take this out. Just another thing to think about. So now we had 14 bars up to here to show us to get long. And each time we would get long, you probably have to use a cash stop. But for this example, I want it to be under, if you didn't get long on this with a stop somewhere down here, you could get long here with a stop underneath this bar. Again, another multi-pivot line with the cluster there. I'm going to point it out to you guys so you can see it. Okay. Anyways, you could consider that another wide range or engulf there. Now, again, even though that's just a very small little mountain or a hill cluster, boom. Okay, showed you there again, another touch, boom, buyers. So notice this is something that Shane talks about too, is that you have these swings that are identical inside. So I'm going to give this some weird color. Let's do gold. Okay. Let's make that easy to be seen. So you have these swings that are about the same size. And these in and of themselves, you could think of as some sort of action, reaction. Okay. They go about this far and pull back, about this far and pull back, about this far and pull back. Let's see. Okay. So what are we aiming for? Well, first we want to box in our profits, right? So if I'm getting long down here, I want to start moving my stop up on the median line under this, like a wave, right? So if I'm long, wave, 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 I want to be putting my stop underneath these lows, wave, stop under here, wave, stop under here, wave, stop under here, wave. You see what I mean? So going back to the beginning and flowing through it, it starts to get a little bit more clear. Now, in this huge bar, price starts to get stretched a little bit because this is bigger than every single bar in the past. It's about the same size as this one. So price is accelerating at this point. Think of it, boom, some type of news or some information or something came out. So what does that mean? So price is accelerating, going higher, 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 higher. So when it does that, you could do one of two things. You could aim for the median line and put your profits under here as it goes up. Or you could just, as it makes new highs, follow the median line, right? and then we drop out. Okay, so it's kind of important that when you first start learning how to do this, is that you're not trying to call tops and bottoms, but you're going with the flow of price. Okay, so flow of price changes, goes up, swings down. This is probably also a 78.6 or 61.8. I used to trade Fibonacci only. So I believe it would be, yeah, exactly. 78.6, right? So sometimes that's a good way to find the C pivot. Sometimes it's not. It just depends how the market's working. But anyways, swing, move up. So that's why I talked about how the Pitchfork and the fibs work together, because maybe I'll do this as an anchor point. It's both the same pretty much. But the ABC here will also be the ABC here. Okay. But the question is, where's the D point? It could be a measured move. It could be a 161.8, right? But we're not using conventional Fibonacci to project where price is going to go. So let's see here. Double the range. Looks like it. Almost double the range. Exactly. You see that? I hope everyone saw what I just did. But I'm going to do it again. So okay, so we do the A to B, and then we extend it up and out to double the range. So this is a horizontal range. Okay. So horizontal range. Okay. So when you think about this, you can also think about it in triangular ways. So, oops. Give me 1 second. I had to find that. Think of it like that. Okay. So, different way to look at it. That's all. So, measure move. So sometimes it can be AB equals CD, or sometimes it can just be a doubling of the range. And that's what this is. Look for a doubling of the range more than an AB equals ZD. So price stalls at the doubling of the range. And how is it telling you that it's running out of gas? Huge thrust up. breaks this trend line and does not reach the median line. So it breaks this trend line, uses it as a switchback, what Dr. Morge and Shane like to call. So comes up, hits that resistance point at doubling of the range. I'm not the only one that has exit orders there, okay? If I am in this trade. First, people are going to look for the median line. Second, people are going to look for doubling of the range or some variation like that, from in my experience. Now, there might be other ways to find the ultimate end of a move here. You could also do this, which you'll see in a lot of my charts, is I will project in the future a multi-pivot line that's also a sliding parallel, okay, and that will predict the end of the move. Maybe extend that a little bit. Okay, so it hit it once, came above it, didn't hit the median line, came back down. Okay, hit it again, came back down. Hit it again. So 1, 2, 3, 4, done. Okay, done. Okay, and comes out, right? So at this point where it starts to go sort of horizontal here, we can think about maybe trying to find a pitchfork somewhere here. It's short, or a way to get short. Somewhere like that. And we could draw, let's see what we have. A width. Not really. There you go. That was a good try on the first try. So a width fork here. Well, sort of a width, but it's a regular fork, but it took the whole width instead of using this high or this high. Let me see if this one will work as well. Not really. So you can see that as a new potential fork outwards. Or you can use it as an alternative A pivot to get that move or any one of these. So that would be a hard fork to trade though. So some forks are easier to trade than others as well. But I hope that this presentation was helpful. I hope that you learned something from it. I hope that it helps you in your trading, how to call entries and learn when to exit. Okay, so as soon as it starts breaking out of here, you can move your profit stops up a little bit closer. Or maybe your goal is the doubling of the range. So thank you very much for taking the time out of your day to view this, and please give me comments and suggestions, and wish you guys the best in your trading. Thank you and take care.